Welcome back to Golden Roll Radio. Today it is just Miles and me because Tori is in Charlotte doing consultations with David McAlvany and Don McAlvany. And then this Friday, we will be in Austin, Texas. They'll do a briefing that evening and then consultations on Saturday. So if you haven't been able to make one of our briefings, go to the website that's in the show notes and see where we're going to be on what dates. Jumping into the markets, I want to talk about GE for a minute because GE has fallen out of bed. As many of you probably know, it's down considerably. They cut their dividend. This was pointed out by Dave Burgess to me yesterday, and I saw something today on it that said that the last time that GE cut their dividend, 2 other times, do you know when they were?
Well, the last one was in 2008, I think you told me. So
yes.
It doesn't seem like that was that long ago.
Right. And then time before that was 1929.
And that's a bit of a jump.
Is that enough said? Does everybody know what happened in both of those years in the markets after GE cut their dividend last time? We'll leave that there. Also talking about the stock market, total margin debt versus GDP is leveraged at an historic extreme. So we are reaching into levels with the stock market valuations where typically they would be peaking. And this is just adding weight to fundamental and technical indicators we've been watching.
Yeah, we've talked about Q ratios. We've talked about PE ratios at all-time highs or near all-time highs.
We talked about the transports last week.
In fact, I think that's a good place to start. We usually start with gold, but I think with what's going on potentially in the equity markets, we should start with the transports, down 6.5% off that top, with a Fibonacci level down a little bit below 8,800. So that means we'd be looking at a 1,200 point sell-off in the transports if it would continue down here. We obviously have a couple levels here it could stop at, and this is just the beginning of what could be its own version of a water slide. So we don't want to make any firm predictions yet. But we've also said, and was pointed out by a few people in the comments last week, as goes the transports, so go the Dows. So we mentioned that last week, the Dow Industrials now down 1.5%.
Yes, that's a good point. And the S&P November low is at 2566 roughly, and we're having a triple bottom there today. We're recording on Wednesday. It'll air on Thursday. That is very, very significant support. The November low, 2566 on the S&P. And if that support level at 2566 is violated, the October lows need to hold, and that's around 2545, I think, on the S&P.
So on top of seeing some weakness in the transports and the equities, both the S&P and the Dow, we're also starting to see interest rates inch up on the treasuries.
That's what it looks like. And I'd have to say that the market theme on Tuesday was definitely a risk-off theme, which is somewhat new, wouldn't you say?
Yeah, absolutely. So this could be a complete fundamental shift in the way people are investing and thinking right now. So moving into the metals, as usual, let's kick it off with gold. Robert, what are you seeing?
It's range bound.
Quick and concise, what do you think about silver?
It's stuck in a range.
And how about platinum?
I like platinum. Platinum's showing some strength, and after triple bottoming right there at around 900, it's above there, and I think it's going to be moving higher.
And let's not forget also somewhat range bound. So the only one that we definitely can say keeps just clipping along like, say, the Dow had been up until this point is palladium, which actually has moved above $1,000 mark and is testing that price as it's been bouncing between $990 and $1,010 for the last week. So all jokes aside, we definitely are seeing that range-bound characteristic in most of the metals. However, I would argue they are showing more strength than weakness. I still think gold up at 1310. I still think silver is going to hold above that declining trend line. And I think we're going to have a breakout one direction or the other coming in the next couple weeks.
And for all you manipulation junkies out there talking about manipulation in gold, I think we saw a little bit of a slam down in gold, but it only drew it down about $10 with a number of millions of ounces being dumped on the market in a matter of minutes. Relative to all of these markets is the US dollar. And yesterday in Tuesday's action, the dollar sold off pretty well, the dollar index, and it may still show some strength moving higher into that trend line we've drawn on the chart for the past few weeks, as well as going all the way back to when the actual trend line was created. So we could see the dollar continue to move higher into that trend line, but I think ultimately the dollar is going to be still on a big water slide. Just a matter of when it resumes that water slide.
Yeah, with the issues in the Middle East right now, the petrodollar is starting to look a little shaky. We talked about that on this week's episode of the McAlvany Weekly Commentary, with Russia now stepping up as, I believe, the leading producer of oil and obviously not a member of the petrodollar scheme. So I definitely see and agree with Robert that we should resume the water slide in the U.S. dollar valuation. We've got stocks coming down. Gold is holding relatively strong right now. Interest rates are starting to rise on the treasuries. There's some weakness showing up around all markets, and all of these things are tied together.
The last thing we'll mention this week is the inflation rate, the producer price index, is up year over year at its highest level since January 2012. That's in contrast to what St. Louis Fed Chief Bullard wanted to say just before the PPI number was reported. So why are we listening to these Fed officials come out and run their mouths? I just wish they'd go away.
Well, and I also read an article this week that October, I think it said like October was the highest tax collecting month in history, yet we still ran a $65 billion deficit. And Bullard, who used to be Captain Hawk, is now Captain Dove. So frankly, I just don't know if these guys are really running the market or if the market is running them.
Well, according to Janet Yellen, since I'm not done with her yet, she says that there will not be another crisis in her lifetime.
And like I said last week,
Yellen.
She's not done with you yet either. So we'll have to see what happens when Jay Powell steps in. So that's going to pretty much do it for Golden Rule Radio this week. We thank you guys for stopping by. Next week is Thanksgiving. What does that mean, Robert?
That means we're not going to have a show next week. We're going to spend time with our families, and we hope that you're able to do the same. You don't get to spend quality time with your family enough these days, I don't think. I think we're too engaged with what's going on in the world around us and lives. So take a minute to put your phone down, turn your computer off, spend some quality time around the dinner table. I encourage you to really connect with your family members this year because those are the most valuable assets that you can have. We'll see you on our next show at the very end of this month.